Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us at the MarketSite studio, we have Brandon Mulvihill. He's co-founder and CEO of Crossover to discuss the evolving nature of crypto market structure. Brandon, it's great to have you with us. Welcome to Trade Talks.
Appreciate it. Happy to be here.
Thank you. Tell us about Crossover and the CrossX platform.
Yeah, absolutely. Excited to. So for Crossover, our fundamental belief is that for institutional crypto participants to really scale trading volumes, it's critical that the market segments clearing and custody and execution. And when you look at what's happening today in the market, there's an emerging story in clearing. Custody has been around forever, and we're hearing names like BNY and State Street, and they're entering the space. But when you look at execution, we felt that that was an area that was lacking. And so myself and our two co-founders came from TradFi, and we thought if we brought in differentiated execution and certain performance characteristics from equities and foreign exchange, we could address some of the gaps in the execution layer. And so we're doing that through our flagship product, which we call CrossX, and we're happy to announce that it launched 2 weeks ago.
So this is an execution-only crypto venue for institutions. Why is that significant for the industry, and how is it different than what's already available?
Sure. So I think that there's two things that I would cite. First of all is differentiated execution logic. So today in crypto, what happens is the execution logic is called central limit order book, or they call it a CLOB. So if you have 10 clients or 1,000 clients, there is one market data and one pool of liquidity that everyone trades into. In our model, what happens is if we have 100 takers of liquidity, 100 consumers, we have 100 independent market data sessions and 100 independent pools of liquidity. So the user on our system is interacting liquidity that's specifically baked for their behavior. And the market maker gets to price specific to the behavior of that user and each user on the system. So it's highly disruptive. And ultimately, what this normally does and what it did in the foreign exchange market is it ultimately drives down the cost of trading. Now, there's a second piece to that. And the second piece to it is in the market today, everyone is an exchange. And that's kind of the word you hear, right? Whether you're a retail exchange or an institutional exchange. What that really means is you have the client captive. So if you buy Bitcoin on OKX or you buy Bitcoin on FalconX, by definition, you have to sell that Bitcoin on OKX or on, FalconX, right? In our model, because we're execution only, we have helped the market set a fungible environment whereby a customer can buy Bitcoin on us, but go sell anywhere else they choose over a prime broker and net settle, right? So we're not holding the customer captive, which means we need to perform and the technology needs to be advanced to win the market share every second of every day.
Would you say that the crypto market structure is in the middle of a reset? It's rapidly evolving?
Yeah, absolutely, because of this idea of captivity and fungibility, right? So the way that crypto has behaved, if you're an institutional participant and you want to trade with 300 companies, you are settling with 300 companies bilaterally. So that means that's a lot of operational movement of coin and cash all through the day. It's very intense. In traditional markets, there's something called a prime broker that allows the institution to trade with 300 participants, but net settle with one. And what that does is it increases operational efficiency and it decreases the cost of trading. And so what we're seeing right now over the last, let's call it 6 months, in terms of this reset, is we're seeing the word prime broker and clearing start to get brought up more and more with names like Hidden Road, Cboe Digital, Clear Token, and Nomura spin out. There's several of these folks. And so what's happening is whereas crypto was kind of born in this retail world and institutions were having to adapt, now the institutions are trying to reset the foundation of how participants access the market.
So where do you see the industry in the next year or two? And let's even think about longer term, maybe 5 years.
So I think in the next year or two, what we're going to see is a continuation of what I just said. I think we're going to see central clearing and prime brokerage models really grab the market by storm. Typically when that happens, and like I said, if you can trade with 300 counterparties but net settle with one, two things happen. Volumes explode and fees compress, right? And so everyone in the market needs to be prepared for that. I think more longer term, maybe 3 to 5 years. I think one of the big themes we're going to see as there's more regulatory certainty is I think we're going to see traditional retail brokers. These are brokers who offer their customers stocks and futures and FX in some parts of the world. I think we're going to see them start to, en masse, offer spot crypto on their platform. And I think 5 years from now, when we're talking about the top 10 online brokers by volumes, by retail volumes in crypto, I think more than half of them are going to be traditional brokers, not native exchanges we talk about today.
You and your co-founders came from equities and FX. What advice would you give to traditional institutions looking to dip their toe in digital assets?
Well, certainly come talk to us, and come find us at crossovermarkets.com. But I think more specifically, there is, with every month, every 6 months, we're seeing more and more TradFi folks step into the crypto market. It's definitely maturing in that sense. And I think you can tap into that market as a little bit of a Rosetta Stone, right? If you can talk to someone who came from TradFi who now knows crypto, you have a little bit of a bridge to understand the nuance between crypto and the TradFi world.
All right, Brandon, appreciate the insight. Thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.